Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. We're going to go through Twitter, see what people are talking about on Twitter, social media. It's going to be financial topics, wealth building topics, and or commodity related topics, because I think that's where the value's at over this next secular bull market in commodities over the next decade. So let's dive in here. Let's take a look and see what people are talking about. It's at Finding_Finance if you want to follow me. And we've got a discount going on for finding-value.com. It is Black Friday. It's Turkey. Turkey is the discount code. You can see the discounts in the description link below. So Grady's saying, well played on both metals, have followed platinum and palladium for many years, said even before called the commodities bear market low back in April of 2020, that they will do very well later in the bull. Platinum had a classic undercut late in cycle weeks ago. Both look good now. This is Palladium's 2-year chart. You can see the massive volume on the right-hand side here. People are accumulating this, as would I. So I think that Palladium's looking quite good. We've got, it's also got a falling wedge, a massive falling wedge from 2022, and it's ready eventually to break out of this wedge, I think. Palladium on a longer term cycle here, up 2000, up 2000. I actually bought this in 2005 and in 2009. Those are my entry points in Palladium back in the day. Now, I was lucky. I didn't know ratios at that time as well as I do today. I only bought it because it looked cheap and it was on a support level. That was it. That was it. So I got very lucky there. Now I can replicate using the strategies that I deploy and have. I can replicate that with certainty. I would size that position up ridiculously if I knew what I was doing and had the knowledge that I have today. It's back against that support pattern, the parabolic linear move upward. So I think that Palladium could be a good one. You can also look at the horizontal support that we've got going across here. Big horizontal support right in the general location of where we're at. I don't think I'll be buying Palladium outright yet. I think Platinum's a better deal. I've been loading the frickin' boat with Platinum. And there's other opportunities here with Rhodium down, Palladium down, and Platinum down, all at support levels, basing out. I think there's other opportunities. So again, this is a 40-year parabolic base indicating a huge move that is coming in Palladium. Platinum and silver side by side, you can see that some of these are very similar. You can see that if you look at the last bull markets here, platinum seems to be a leader. You can buy platinum, rotate into silver, and then play silver. That is a strategy that I'm using. If you had done that, you could buy platinum here. It had a huge move up in the early 2000s, and then you could swap to silver at this general location and then play silver, moving silver all the way up. Silver moves roughly this, it moves a little bit more than platinum, but platinum has generally been a first mover. We haven't really moved yet. We had a move off the bottom, and there's a big disconnect in terms of the pricing here. I don't know if this relationship will work again, so what I've done is I've taken positions in both silver and platinum. I think silver and platinum are the cheapest metals in the world. I think they're some of the best investments in terms of risk reward, and I think we are going to see massive upside in both of them. If one of them takes off first and we get a ratio, a dramatic ratio change, I will swap some of that metal over into the other metal that is cheaper as time progresses. And I will let people know when that occurs. But that's what it looks like for platinum and silver. This is the silver versus platinum ratio in an 8-year range. I think this is a ratio. When this price ratio moves up, silver outperforms platinum. Now, this is silver divided by platinum. I usually do platinum divided by silver. But platinum is very cheap. And I think this ratio is going to come down. We're at a very low price for platinum in relationship to silver, which makes platinum the cheapest metal on the market by a long shot. It's outperformed Palladium recently because Palladium's pulled back, but I think Platinum's going to go higher, and I think Palladium will go up as well. I think Platinum, the setup for Platinum is a very good setup. I'll just say that. Grady again. We've got 3.5 years ago, I called the commodities bear market low, said back then that the mother of all commodities bull markets was starting. Totally agree with that. That's how I found Grady. I was a huge commodity bull market, am a huge commodity bull market. Commodities bull is what I should say, not bull market, bull. And back in 2020, I saw the bottom and I'm like, dude, I am going in, baby. It's also said that this chart was a ticket out of the rat race. I completely agree with that. That's why I went in big. Plus said big inflation was coming. Hugely important chart for any investor. We have a 60-year bullish falling wedge pattern all the way to a false breakout that's going to make its run here. When this ratio moves up, commodities outperform the stock market, and we monitor that. Now, it doesn't mean it's going to be a smooth ride. We're going to get waves. This fell in waves. It fell, came in, fell, came in, and those are bear patterns. You can basically put an upward bear pattern. Now, what you're going to see is this is going to turn, and your pullbacks are going to be located downward, not upward. That means you're in a bull market. This here is a bull market pattern that we are putting in, and that will probably break to the upside. Why do I say probably break? Because gold's sitting at all-time highs. All of the precious metals, all of the other commodities are putting in bottoming patterns. That gives me more confidence that this is all going to be one big gigantic move to the upside for commodities. We also have the right market conditions of increasing interest rates and the 40-year decline of interest rates breaking. That all of the stuff that I look at is suggesting a gigantic commodity bull market. It's not just one pattern. It's not just one commodity sector, or it's not just one ratio chart. It's everything combined that is giving me the confidence that this is going to come. Gold versus GDX. Are you watching this absolutely gorgeous chart setup? That's an inverted head and shoulders here, guys. For GDX to outperform, I think he's got that priced in gold. Let me see here. That's GDX. Inverted head and shoulders for GDX on a daily linear. Looks fantastic. I did a lot of fractal analysis back in the beginning of YouTube. Looks like Scott is doing his fractal analysis. He's using Ethereum, and I used Ethereum to overlay on a lot of different things. And the reason this works, a lot of people will say, well, that's stupid. They're not the same thing. Guys, that's not what we're looking at. We're looking at the human herd psychology trading against each other. So when these sectors come into bullish areas, the herd trades it the same. You get the same pattern and the same type of fractal sizes. So what you can do, just for the sake of it, is you can take a fractal, a previous fractal of Ethereum or whatever, and then you can blow it up or blow it down. You basically line up the fractal size in the beginning, and if the fractal aligns, you can get a rough estimate of where we could potentially go. I know some of this people think is ridiculous, the size of the moves. I don't. I think that people just haven't looked at history and studied history that much. They haven't looked at human psychology and the herds and the way that these things are trading against each other. I don't use fractal analysis only. I use everything at my disposal. Technical analysis, fundamental analysis, inventory levels, cost curves. I use it all. And then I try to come up with a strategy to make money from it. Uranium, when it was down in 2020, the price was far below the cost curve. The price has to go higher with time. So if you're patient enough, you're going to make a bunch of money. Now, I know some people were pretty early. They entered in 2017, 2018. I get it. You guys have been in this trade for a long time. I came in kind of later in 2020 at the bottom of 2020, and I'm sticking with this. But the fractals all align. The inflationary market conditions are there. The interest rates moving up are there. It's all there. Everything that I look for is in alignment. It says if it keeps following 140-ish possible before mid-2024 and 200 by year end early 2025. onto much higher prices ultimately is what Scott says. And I agree with him. I don't try to focus too much on the ultimate price top. The price top will happen. We'll probably get a sideways consolidation move just before the price top. But the returns are going to be whatever the returns are going to be. And the uranium price is going to go to a level that I think people are going to be like, I didn't think it was going to go that high. That's my opinions there. This is what happens when high interest rates negatively affect the demand-supply balance. This is not, no, it's not that. I'm sharing this because I disagree with it. U.S. homeowner vacancy rate is at levels never seen in 60 plus years. Vacancy rate means that people are in homes, either renting them or they have purchased them and are in them. You know why it's this low? Because we have the largest deficit of homes that the market has ever seen. The unaffordable level that we are at is driven by not having enough homes for household formations. Period. There's no denying that. That's why the vacancy rate is so low. Now, interest rates have rocketed in the short term because they use stimulus money on top of the real estate market in the credit expansion phase. He raised rates to a level that I don't know if it is sustainable for the real estate market to generate credit from. And we could get a slowdown in the short term. But the vacancy rate is a function of not having enough homes in the market. Period. It has nothing to do with high interest rates. That does not negatively affect I could say this. It might negatively affect the supply. Because that could potentially occur. People are not buying new homes. But the supply is also impacted by inflation and the cost of homes. So I don't think that the home prices can go down in a large way because the price must stay high to incentivize new homes to come online. Your cost curve of the home price, basically how much it costs for a new house, is going to determine the existing home prices. I don't think the size that people want to live in, 2,000, 3,000, 4,000 square foot homes, I don't think they can go down much because I think the ability to buy a new house priced at that size is going to be $600,000, $700,000, $800,000, $900,000. So I don't think houses that size can go down very much, at least in this area, based off of the new homes that are coming online. Now here's another one this is more evidence of a commodity bull market. And I'm going to yank this up. The Swiss franc has been destroying the US dollar for over 50 years. Now check this out, guys. Look at the 1970s. 1971, it came all the way down. This breakout and outperformance of the Swiss franc against the dollar, it goes downward when the Swiss franc is appreciating against the dollar. This is a commodity bull market. Commodity bull market, 1980, it basically bottomed and came back up. We had another commodity bull market in 85, 87. Another bull market in 2002, it broke down. So when we look at these breakdowns, you get commodity bull markets if the commodities are cheap. Then you get blow-off tops potentially in precious metals as well. What are we at right now? We're just breaking down the continuation breakdown line on a horizontal line too, which is a big breakdown. This here is going to lead to the Swiss franc outperforming the dollar. It's another commodity bull market that's coming. This is more evidence of that occurring when you look at the relationships of the currencies. And generally what occurs is you're going to get strength in the currency in an increasing interest rate environment. And then when that blows to the downside, when the interest rates stop going up or they get lowered, that is when you get a depreciation in the dollar. And then everything priced in dollars is going to go up. Commodity bull market in 2023 is just like 2002, and it's just like 1985, and it's just like 1971. We are all very early in this commodity bull market. It's coming. More evidence of that. I like this. It says, and this energy demand collapse, is it in the room with us right now? Because we haven't had an energy demand collapse. I mean, obviously, natural gas demand is dependent on weather. Oil demand has been moving on up, the physical oil demand. I think there's big positioning occurring in the financial markets, and I think people are afraid of a demand collapse, which is showing up in the pricing of oil. But it doesn't mean that will necessarily materialize. The S&P 500 experienced a minus 10% correction amidst a rising dollar and 10-year yield. Currently, the rally is occurring alongside a falling dollar and a decreasing 10-year yield. That is what is occurring short term. But at present, each of these assets is becoming very tight if the dollar and 10-year yield break to the upside. So it is possible that the dollar and the yields go up still, and that this here will be at support for longer. We could go at support a little bit longer if yields were to go up. If yields go down and the dollar goes down, I think this will break to the downside. So we're real early in this. We're real close to a potential break, but there might be a bigger increase in yields still left in the market. And that's going to put downward pressure on the S&P 500 potentially. We'll watch it together. Being a bear gets you nowhere. The comment is absolute blasphemy on FinTwit, and I think I already went over that one there. So I'm going to end it there, guys. That's what I've got for today. Give me a thumb up on the content. Subscribe to the channel. Subscribe to the website. We have a Black Friday special. Turkey's the deal. I'm going to release another video clip today describing what I offer on it. Somebody had some questions, and I'm just going to answer it to everyone. So look for that midday today. I'll release that, and it'll describe kind of my strategies, investment strategies, what you get, what I provide. I provide midweek updates, question and answer sessions, and there's training stuff on the website, technical analysis training videos that I developed. I also put a bunch of posts on things that are important, I think, to listen to. So that's what I've got for today, guys. Hopefully you have a good weekend. We have a question and answer session coming up at 7 a.m. Saturday, which is tomorrow, and that's at Mountain Standard Time. So bring your questions there. Ask me whatever you like, and I've got some ideas. We can go over some companies if you like. Bring your companies and ideas if you like, if you want me to take a quick look at it, technical chart-wise. But yeah, that's what I've got, guys. All right, catch you later. This is Finding Value.